Credit cards didn't make life easier, they made decisions harder. Have you ever noticed how often a purchase feels reasonable, not because of its total cost, but because of the monthly number attached to it? It's a quiet shift in how we think about money. And it explains why many people who earn decent incomes still feel financially stuck. Let's walk through this calmly. Picture a fairly typical situation in the US or Europe. You earn around $70,000 a year. After taxes, health insurance, and deductions, about $4,300 a month lands in your account. You don't feel wealthy, but you feel stable. Rent or a mortgage takes $1,600. Your car payment and insurance together are $650. Student loans or an EMI add another $450. Utilities, phone, internet, subscriptions come to about $350. Before food. Before weekends. Before saving. You're already at $3,050. Groceries, fuel, and a few meals out add another $800. Now you're at $3,850. What's left is around $450. On paper, everything looks responsible. Nothing feels excessive. This is where affordable monthly payments do their quiet work. A car isn't a $38,000 decision anymore. It's a $650 a month decision. Furniture isn't $4,000. It's $79 a month. Even phones, vacations, and appliances get translated into monthly numbers small enough to ignore. The system is built this way. Banks, dealerships, and lenders don't ask how much freedom you're giving up. They ask whether this month's payment fits your paycheck. And psychologically, that feels safe. Our brains prefer certainty now over flexibility later. A small predictable payment feels less risky than a large unknown future cost. Let's slow down the math most people never stop to calculate. A $650 car payment over 6 years is $46,800. Add interest, insurance upgrades, and maintenance, and the real cost creeps past $55,000. That's not a moral failure. It's a framing issue. When costs are broken into monthly pieces, the full weight of the decision disappears. The same thing happens why. And subscription-heavy lifestyles. Individually, each payment feels manageable. Together, they quietly harden your financial life. This is the hidden risk. Fixed commitments reduce flexibility. Flexibility is what absorbs shocks. It's what allows job changes, health issues, relocations, or time off. Without it, even a good income can feel fragile. This is also why earning more doesn't always reduce stress. As income rises, lenders offer more room. And lifestyle tends to expand to fill it. Payments increase faster than awareness. Over time, you're not trapped by one bad choice, but by a collection of reasonable ones made without seeing the total picture. Financially intelligent people don't reject monthly payments entirely. They just think about them differently. They look at total cost before monthly comfort. They ask how long a payment limits future options. They care less about whether something is affordable now, and more about whether it keeps life adaptable later. They understand that peace of mind rarely comes from owning more. It comes from owing less. This isn't about living small or depriving yourself. It's about recognizing when convenience is quietly expensive. When only $200 a month repeats often enough, it shapes the next